Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So FanDuel parent Flutter, it's outperformed a lot of its competitors in this space. They did give a mid-quarter update, Landon. I thought this was interesting on the 7th of January where they lowered 2024 revenue based on the fact that, hey, people are actually winning their bets and they had to lower their revenue output, but it doesn't seem to be negatively affecting the stock that much. It did drop for a couple days after that, but what kind of data are you guys seeing out of Flutter?
You know, I love that update. I mean, that just makes me feel good. Like, hey, some people are actually winning, right?
Yes.
And you know what it actually came down to is NFL. A lot of the favorites covered more than their share this year, and people love to bet favorites. And that you know, that kind of ebbs and flows. That's going to be a one-time event. That's how investors are going to see it. At least that's how they should see it. And really what it's going to do is it's going to get people excited about next year, and they're going to, bet more. And so I think everything's going to be fine for FanDuel. But it's just nice to see the player win once in a while. But yeah, if you look at last quarter, their revenue was up significantly, 27% year over year. They went from -10 earnings per share to +43. And they've done a lot of good things. I mean, the industry overall is moving in the right direction. 38 states have some form of sports betting allowed, including DC, and 12 to go if you want to look at it that way. And the industry overall went from 11 billion to over 13.5 billion on a year-over-year basis from 2023 to 2024. So obviously they're in the right space, and it's just a good spot to be in. Now, what was difficult about this industry in the last year or two was the cost of customer acquisitions. Very high. It was kind of a land rush, for lack of a better word. Everyone was going out trying to grab these customers, get them loyal to their platform, because customers are very valuable over the lifetime of the customer. That has decreased as we actually see that web searches are down across the board. We believe, and we have data that shows that that's because FanDuel, DraftKings, and the others are pulling back a little bit on customer acquisition costs. They're saying, you know what? Let's just let this market cool off a little bit. We'll get who we get, but we're killing each other. It's a bloody ocean right now. Let's not pay as much. And I think that's going to help them in the bottom line. But you can see those two they're the ones that dominate. I mean, even against the traditional MGM, Caesars, it's all about FanDuel and DraftKings. So they're the two that are neck and neck right now. DraftKings just had a report. They had a pretty good one. I mean, they've good investor reaction to it. They've done really well. They also talked about the NFL dragging down their performance a little bit because players are hitting, and some of the parlays are actually hitting, which are generally speaking great for the book to take in parlays because those have a higher hold percentage for the book. But this year was working out for players. So again, one-time thing. But overall, I think that this company with FanDuel and all of their other exposures going in the right direction. Investors, though, are definitely going to be honed in on FanDuel specifically because of the fact that their international properties are up about 15% year over year. FanDuel's up 51% year over year. So that's where the growth is going to come from. And so, I think that, seeing where DraftKings is a positive, but what we've got here, and you can see is, DraftKings is outperforming. Both of them are down slightly, a little bit. Web searches are down, but they're outperforming. So I think that's a little bit of a question mark going ahead for Flutter and FanDuel. But right now, it's always a good time to own a company that is, holding 1.5%, 2% of every money that comes in, and they don't have to produce anything. I mean, it's a full margin product, so it's a really strong product to have. But right now, a little bit concerned about their underperformance versus DraftKings, but they're in a good spot overall.
Landon and Tom, we have to, don't make this an intervention now, guys, because bettors winning, this is not a romantic comedy with a happy ending. This is a horror movie with a very sad ending, because people that gamble lose at gambling, right? The most of them. So when I look at, the people betting are winning their bets. Oh, that is so temporary, as you know. You win it in Las Vegas the first night. What do they tell you? Get back in there. Keep betting. So, Landon, my question to you is, it looks like DraftKings is taking a little bit of lead in the battle based on your data versus Flutter or FanDuel. It looks like they're doing a little bit better in both your data that you sent over. I ask this to Andy and you and Megan often when we have setups like this. Who do you think, who does your data point to is going to be the winner in this fight? Or, I'll give you an out here, is the pie big enough for all of them?
You know, it's a bit, I'll take the out. I mean, honestly, it is big enough for both of them. I'm sorry to say that, but they're, you know, right now DraftKings is doing better. They're, you know, over the short term, they are doing better, which I think, you know, normally if you see your strong competitor report and they have a pretty good report, that would get you excited as an investor. Obviously, that's not the case today. They're down, you know, the market's down, but, you know, I think that people who are invested in Flutter need to just temper their expectations, even though DraftKings had a good report. I think that, you know, the data shows that they're doing better right now versus Flutter. So there's that. However, this is a growing market, and it's one of the best places to be as an investor in that you have a product that is always relevant, always interesting, and it costs you basically nothing to run it. I mean, the margins are extremely high. It's just how much does it cost you to acquire customers? That's it. You know, the actual service itself is you're just taking a bet. You're putting your money on the line as the book, and you know that over time you're going to get 51, 52% go the correct way. So, you know, years like this or seasons like this, all it does is just, you know, give people a little bit of hope. And next year, you know, I guarantee you there's thousands of people right now who have an Excel spreadsheet that, okay, the last year I made this much money. Now I'm going to double it up next year and I'm going to do this much better. I got bad news for them. You're helping the DraftKings and Flutter investors right now with that thought process. You're right. It only goes one way over time. But, you know, it's a great place to be for these businesses. But I do think there is enough to go around as long as those customer acquisition costs can kind of stay in a reasonable range. And the fact that they're pulling back on that gives me hope as an investor because, you know, there's only so much you can pay and people aren't that brand loyal, right? I mean, if you're re-upping and, you know, you lost your money in your account and all of a sudden, you know, you're on DraftKings and then you see something on FanDuel with promotion where you get X, you know, they'll match your money or you'll get no juice or whatever, free bet, whatever it is, you're going to say, all right, I'll take that one. And it's not like it's a hard system to learn how to use. So there's not going to be a lot of brand loyalty. For the most part, it's a commodity. You can bet on this team, this player, whatever you want to do, and you're generally going to go where the price is right. I mean, if there's a significant difference, you're going to move your money over to the other one. So I don't think that, you know, paying a lot for customers is the right strategy. I think they just have to have an appealing product that continually gains and loses customers to the other one, but hopefully gains more customers. And as they grow the popularity of the sport of the industry, which is happening, they just continue to take more and more, and hopefully they can defend their share of the pie.
Yeah, and I think we sometimes lose it in the fact that their overseas operations are massive and just as big or bigger than what they have here in the States with FanDuel also. But Landon, you got an earnings score for this one going into the report?
Yeah, so I think, you know, we're on Flutter, we're about +7, so fairly neutral. We like the pullback that we've seen, but we don't like the relative weakness to the competitor. So it's slightly bullish. Long term, we're bullish on this one. It's just kind of a free money situation. They're always going to make money as long as they keep their customer acquisition costs down. But going into earnings, just leaning on the plus side of neutral, but kind of staying away.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder of LikeFolio.